If you're making $100,000 a year and wondering how much house you can actually afford in 2025, then this video is for you. In this video, I'll break it down step by step from your monthly income to what the banks really look at and what you'll need upfront as a first-time home buyer. So stick around because you might be surprised by how much home you can comfortably afford and what hidden costs you don't want to forget. Okay, so let's start with the basics and jump right into it. If you're making $100,000 a year, that breaks down to about $8,333 a month before taxes. Now, after taxes, your take-home pay is roughly $6,000 a month, give or take depending on deductions, state taxes, and so on. Now, a good rule of thumb to follow when purchasing a home is the 28% rule, which means you should spend no more than 28% of your gross monthly income on your housing costs, which means that's about $2,333 a month for your mortgage, taxes, insurance, and HOA fees if applicable. Although banks will allow you to borrow more than this, and like I've said before, and I'll continue to say, just because a bank will loan you a certain amount of money or get you pre-approved for a certain amount, doesn't mean you should always go out and buy a home that maxes out that amount. You want to make sure that you're factoring in your lifestyle needs so that you can comfortably afford your home and not have to make a ton of lifestyle changes just to afford your monthly mortgage. And you definitely don't want to stretch your budget so much that you end up facing foreclosure in the long run, especially during uncertain economic times. It's always better to stay well within or even under your budget if possible. And if it's the first time to our channel, my name is Frank, and my wife Alyssa and I, who run a small husband and wife real estate team, get calls, texts, and emails from people just like you looking to buy homes right here in San Antonio. So if that's you, don't be shy or hesitate. Just give us a call, send us a text, or send us a quick email. That way we can help you make a smooth move right here to San Antonio. Now back to the video. Now, with all that being said and utilizing the 28% rule that got us to a monthly budget of $2,333, let's see how much house that actually gets you. So at a 7% interest rate with a 30-year fixed mortgage and 3.5% down, you're looking at a home of $362,435. At a 6% interest rate with 3.5% down, you're looking at a home price of $404,145. And at a 5% interest rate with 3.5% down, you're looking at a home price of $450,777. Now, please keep in mind that these numbers do not include property taxes, which vary depending on what area you're in, as well as home insurance or mortgage insurance premiums. Now, all of these items will vary in price and depend on certain factors of your purchase. So I'm going to put a link on the screen to a video I recently made where I did a breakdown of what these costs could look like for you on a monthly basis. Now, as you can see, another factor that determines how much home you can afford are going to be the interest rates, which you can see at 7, 6, and 5%. Now, each option had a significant difference in amount of purchasing power. Now, as a reminder, the current interest rate on a national level is sitting at 6.87% according to Mortgage News Daily. And of course, depending on your specific loan structure, you'll look to obtain a better interest rate depending on your debt-to-income ratio and credit score. Now, if you're searching for an even lower interest rate, many new construction builders are offering currently interest rates that are below the national average, as low as 4.25%, which we can discuss on a separate video. But now that we've established how much home you could possibly afford, let's talk about what you need upfront as a first-time home buyer. So the first item on the list is going to be the down payment, which is typically 3% to 20% of the purchase price, depending on the type of loan you're utilizing. Next is going to be closing costs. Now, this is usually 2% to 5% of the loan amount. And next is going to be earnest money deposit. Now, 1% of the home price is usually the norm, but you can always add more if you want to show you're a serious buyer amongst other offers. Another item on the list is going to be home inspection and appraisal. Now, you can plan to budget anywhere from $600 to about $1,000 for both. And last but not least is going to be moving costs and new home expenses. So things like furniture, repairs, moving company costs, etc. All of these items can add up fast, so be sure to budget enough if these are things that you're planning on utilizing during your move. Now, just to recap, I want to reiterate a couple of tips I like to remind my clients of, which are going to be: number one, you have to know your numbers. A lender can pre-approve you, but only you know what you're comfortable paying monthly. Number two, try to keep your debt low. Car payments and student loans impact your affordability fast. Number 3, don't forget the extras. Property taxes, home insurance, and HOA fees can sneak up on you fast, so be sure to keep these in mind when house hunting. And number 4, if you're a first-time home buyer, although purchasing a home can be very emotional, you have to look at this purchase as a business transaction and make sure that the numbers work in your favor and not the other way around. You can buy a home making $100,000 a year. The key is knowing your numbers and having a solid plan. So with that being said, thanks for watching. I hope this video helps, and I'll see you in the next video.